Good evening. Today is the 14th of November, 2022. Today, the 10-year Treasury yield remains subdued below 4%, despite hawkish commentary by Waller and slightly dovish comments by Brainerd, who hinted at a likely slower velocity of rate increases. It is noted by several market analysts of a recent dramatic fall in the volatility of Treasury bonds, hinting at further support for risk assets. The price action of the S&P 500 continues to follow a price channel, with the price action bumping off the top of the channel today before turning lower. This is consistent with a slight change of investor positioning, reflecting a change in the overall sentiment, from overly bearish to that of cautiously optimistic. The CCI oscillator now points to overbought conditions, with the MACD hinting at a loss of upward momentum in the short term. With these signs, it may be a good time to trim profits at these levels. It is noted that the current price level is hovering around the 150-day moving average, with a short-term support level of 3,900, coinciding with the 100-day moving average. If the regression channel continues, it points to a possible rematch of the 200-day simple moving average. If interest rates and the dollar index continue to be subdued, with additional improving inflation indicators, there is a path for the price action to break above the 200-day moving average and continue to rally into the year end. As the primary driver of market movements continue to be inflation and the Federal Reserve story. This move would be in defiance of the macroeconomic fundamentals, noted with falling consumer sentiment, increased inflation expectations, and decreasing future earnings and growth estimates. This week, we have several important economic reports coming out: PPI tomorrow, retail sales and industrial production on Wednesday, housing starts, jobless claims, and the Philly Fed Manufacturing Index on Thursday, and existing home sales on Friday. The market would be expecting readings consistent with continued economic slowdown. We will be paying attention to any hints of an acceleration in the current slowdown, as the 3-month and 10-year inverted yield curve continues to persist. That's it for today. Have a good week.